If you've driven through Dubai lately, you've surely seen cranes, new towers, and entire communities taking shape. It might look like non-stop construction, but this is what growth and demand looks like in real time. Over 300,000 units are set to hit the market over the next 5 years. 285,000 apartments and 7,600 villas and townhouses. So as a developer, you might be wondering, is it still worth building more? Which areas make the most sense to buy land and develop in? And what's the cost of that land? How should you enter the market, independently or through a joint venture or development management route? What type of product actually sells in today's market, luxury or affordable? And who are the main buyers? So in this discussion, I'm going to break it down to you. I'll talk to you about where to build, how to enter, and what strategy fits your profile best as a developer in Dubai's growth. Dubai's population touched 4 million people in August 2025, and by 2040, the plan is for it to increase to 7.8 million people. And to top that, the tourism numbers will be up to 40 million by 2029 versus just 19.6 million in 2024. Now, think about that for a moment. That's not just a statistic, that's infrastructure, hospitality, housing, transport, schools, and retail, all expanding to serve an entirely new scale of population. And with that, real estate continues to grow. As of today, there are 755 registered developers in Dubai. Even with this level of supply, demand continues to exceed what developers can deliver. Hello everyone, I'm Seema Balwani from Xperience Realty. Having lived in Dubai for over 40 years, I've seen the city grow from the small trading hub that it was to the global powerhouse it is today. While Dubai has significantly changed, one thing has remained constant: the visionary leadership of Dubai and the United Arab Emirates. With an expanding economy, increasing foreign investment, and the city's push towards becoming a global business hub, Dubai, which aims to be the best city in the world to live in, is a magnet for developers, investors, and end users. To really understand whether it's still worth developing in Dubai, we need to look at why this growth is happening. It all comes back to Dubai's economic agenda, the backbone behind every launch and every master plan taking shape today. Over the next 15 years, around 3.8 million new residents are expected to move to Dubai, and nearly 2 million of them will arrive in just the next 8. That's why the current 300,000 units under development aren't an oversupply. They're part of a long-term plan that began back in 2022, preparing housing for the population coming between 2025 and 2028. But beyond that, another 1 million people are expected to move here between 2029 and 2030, which means we'll need at least 150,000 more homes, and those launches need to start now. So while it might look like a wave of handovers, what's actually happening is a carefully timed cycle. Today's handovers will be absorbed by 2028, and the new launches are what will serve the population arriving after that. And this doesn't even cover the tourism surge that will give rise to short-term rentals. Now that we've established the demand, the next question is, does it still make financial sense to build? And this is dependent on multiple factors. Land prices have risen by 300% in the past 3 years. Labor costs are up, and there's a 9% corporate tax and 5% VAT to account for. Naturally, these cost increases have pushed property prices up. But what helps absorb these higher prices is that the buyer base in Dubai is largely international. Buyers for markets like London, the US, and Singapore are accustomed to paying between $1,000 and $4,000 per square foot. In comparison, Dubai offers better value at just $450 per square foot on average. I will cover the cost of land later in the video. But beyond the cost of land itself, expect these costs: DLD fees of 4%, broker commission of 2%, marketing costs would be around 1%, construction costs. Here's a breakdown of approximate construction costs per square foot in Dubai. These are broad ranges only. I've displayed these costs based on approximates for apartments, villas and townhouses in different price segments, just to give you an idea as a developer. Some developers might depend on financing their project, so you do need to consider these costs as well in your feasibility. Now, once you do your feasibility study and decide if it's worth investing or not, the next question is what to build and where to build. We will cover the top areas in detail shortly. Areas like Dubai South, Jaddaf, and Dubai Land Residence Complex (DLRC) offer more affordable options for development. If you're looking to create something truly iconic, consider locations like Sheikh Zayed Road, Business Bay, downtown, or waterfront locations. These areas allow for legacy projects and, in the long run, could open doors to joint ventures and easier financing options. Collaboration with hospitality brands could be a good opportunity as well, given there's a strong demand for branded residences in this market. On the other hand, affordable projects with attractive payment plans tend to sell quickly amongst first-time buyers and lower investment entry points, giving developers solid returns. If you're working with limited funds, focusing on more affordable developments could be a wise strategy. Alternatively, one can choose to develop and construct a limited cluster of townhouses or villas and mansions on exclusive plots. Ultimately, the choice depends on your resources, your vision, and the type of impact you want to make. Whether you're building luxury or more affordable options, Dubai's real estate market offers immense potential. What type of structure should you look at to enter the market? That's another question we're going to answer. Since Dubai's real estate market took off, developers from everywhere have been flocking here. What usually takes years, setting up, funding, forming a company, structuring operations, is now happening fast. You'll need to ensure you and your entity are properly licensed and regulated by RERA, the Real Estate Regulatory Agency, under DLD. Developers entering Dubai can choose between independent development, joint ventures, development management, co-development, or SPV-based partnership. The right structure depends on capital strength, experience, and how much control or risk the developer wants to take. Independent development suits established players with strong liquidity who want full ownership, control, and brand presence. If you look at joint ventures, they work best for developers with expertise but limited capital. They can partner with landowners or master developers who provide the land. DMA, or Development Management Agreements. This allows experienced or branded developers to manage projects for a fee without owning the land, offering low-risk market entry. Co-development, or the revenue share structure, splits costs and profits between partners, balancing exposure and returns for mid-sized developer. SPVs is the next one. Special purpose vehicles are ideal for institutional or large-scale projects as they isolate risk and attract multiple investors into one entity. Smaller or first-time developers should start with JVs or DMAs to minimize upfront costs while building credibility. Mid-sized developers benefit from co-development to scale steadily, while major players can go independent or use SPVs so that they can expand strategically. There's no one formula. It depends on your capital, your timeline, risk appetite, and long-term vision. Dubai has a very clear framework when it comes to land development regulations. Developers, they need to understand the plot size, the approved floor-to-area ratio, or the FAR, and any height restrictions set by the zoning regulations by the land department for that area so that they can understand the GFA. Don't overlook setback requirements either. Now, key to note, you'll also need to park funds in an escrow account. By law, that's 30% of the construction cost, and it can only be used for the project. If you prefer not to open an escrow, you can start off-plan sales after reaching 30% of project completion. Now, typically, developers sell most of their inventory within a month, and full sellout can happen within 3 months. Some projects move even faster, as ours sometimes. Depending on how strong the proposition is, of course. Approvals do take time, and most developers subcontract construction. So build that into your timeline. Now, before we move on to the top areas to buy land in, I wanted to share these simple yet powerful words by His Highness Sheikh Mohammed bin Rashid Al Maktoum. The future belongs to those who can imagine it, design it, and execute it. It isn't something you await, but rather something you create. It is under His Highness's visionary leadership, Dubai has become a global hub and a city that attracts the world's best and brightest. It's a city where everyone can thrive, offering freedom, opportunities, and world-class infrastructure. As we get closer to the full realization of Vision 2040, which is Dubai's blueprint to double the population to 7.8 million people, we're moving towards a more sustainable, inclusive, and future-ready city. On top, there's the D33 economic agenda, where the city aims to double its GDP by 2033. We have a highly regulated land department, as I've mentioned earlier, which ensures that all real estate activities are conducted in a lawful and regulated manner, protecting all parties involved. The government, it supports all types of developments. They have a responsibility to ensure affordable housing, so there is a strong focus on that segment. And given Dubai's status as a magnet for luxury, there is ample support provided to developers entering the luxury segment as well. Now moving on to the most commonly asked question. What are the top areas to buy plots in? For this part, I'll head back to my office so I can better explain this to you on the map. Let's go. I'm back in the office and I'll take you through the map and show you 5 urban zones as per Vision 2040 and what plot opportunities are there. I'll categorize the areas into premium and affordable. Now, if you look at the map, then this is Zone 1. The primary purpose of this zone is heritage, commerce, and cultural revival by balancing old and new. The aim is to safeguard the past and ensure old Dubai remains an active part of the city's next phase. Dubai wants to attract more permanent residents to the zone. And how are they going to do this? By improving the housing and quality and amenities. Now, if you look at the zone, the first option where you can get plots, it's in Dubai Islands, right here, where it's considered a premium area. Why? Because of it being on the waterfront. Here you can get plots for residential construction, for commercial, for retail, and to build a hotel. Now, Dubai Islands, it consists of 5 interconnected islands, as you can see on the map. And it's a master waterfront development by Nakheel spread over 17 square kilometers. It has close proximity to downtown, Deira, Bur Dubai, Maritime City, the cruise terminal, and the Dubai International Airport. The island, it's projected to house 38,000 homes, 87 resorts and hotels, 9 marinas, and 21 kilometers of beach, along with a 9-hole and an 18-hole golf course on the water, first of its kind. Island A, also known as a Central Island, this one, it's a mixed-use island. Here is where you can get plots for sale. Now this island is going to have a mall, entertainment, business, waterfront, and marina, high-end island living, the works, right? Here you've already got resorts such as Rixos and the Centura Mirage, just to name a few, and a lot under construction as well. You can acquire plots on the beachfront or on the internal side. The pricing here ranges between dirhams 400 to 700 per square foot. Of course, it all depends on plot location and the permissions of the plot. If you look at Island B, if you look at Island B, C, and D, right, you will not get plots over here. Let's talk a little bit about them though, so you're aware of the entire community as such. Island B is also known as Shore Island. It's going to have integrated resorts and communities, all developed by Nakheel. Island C, it's known as the Golf Island. It'll have an 18-hole golf course and private villas. As of now, there are no plots for sale. Island D, which is known as the Marina Island, it'll have a 9-hole golf course, a boutique resort and marina, and low-rise residential apartments. I apologize. Now, talks are that a large developer, by the way, has purchased the entire island to develop a master community here. I can't take any names. Now, Island E, that's the one of interest. It's known as the Elite Island, and it will be a luxury private island community with luxury estate plots. There's no confirmation if the developer will be selling mansions or plots here in the future, but keep a close eye on this one if you're interested. The second prominent area in Zone 1 is Maritime City, right over here. This can also be categorized as a premium area. Again, it's on the waterfront. Now, 86% of the plots here are already sold. You can find limited residential plots, but there are ample commercial plots available for sale here. And these start from 300 dirhams per square foot. That's everything to do with Zone 1. Let's now move to Zone 2, and I'll plot it on the map. It's also known as the Global Financial Hub. You've guessed where it is, right? It's right about here. Now, the primary purpose of this zone is business, finance, and urban density. The zone includes Burj Khalifa, downtown Dubai, DIFC, and the Sheikh's private office and palace as well, by the way. There are three options for developers looking to develop residential or mixed-use buildings here. And I'm stating buildings, I'm going to talk about it in a second, because there will not be any villas possible to be constructed over here. The first area is Jumeirah Garden City, right about here, very close to Satwa for those oldies here like myself. Now, this is an area that I would classify as an emerging location for affordable housing. It's located off Sheikh Zayed Road, the main lifeline, and it's considered a highly central location due to its proximity to downtown and the Jumeirah district in Dubai. Here you can get freehold residential plots, and the properties here, they're zoned for the G+8 construction. So we call it mid-rise residential buildings. Over here, the permitted floor to area ratio is 3.5, and the price per square foot ranges anywhere between 400 to 750 dirhams per square foot. Let's look at the second area in the zone. That's Business Bay, right here, next to downtown. Here, the developers have the opportunity to buy plots for both commercial and residential building development, and this falls under premium development. Why? Because the district's appeal lies in its central location, given its proximity to DIFC. The area has a growing portfolio of luxury, residential and commercial projects. With infrastructure upgrades and water enhancements especially that are underway, Business Bay, this is going to remain a cornerstone of Dubai's real estate growth story. Now, here you have the benefit of height, the location, the connectivity, and there's room to design something special given it's considered waterfront living. The maximum permitted FAR in Business Bay, it's 48. Prices here, they start from 650 dirhams per square foot. Now the third area in this zone, that's Jaddaf, right about here. It's a developing area for affordable homes, and it's designed as a mixed-use waterfront hub supporting business, healthcare, and cultural growth. It's closely tied to, by the way, downtown Dubai's economic ecosystem because of its proximity. It's located between downtown Dubai and Dubai Festival City. So it gives you very easy access to these business districts and cultural landmarks. You must have recently heard the news about the museum on the creek, the floating museum on the creek. It's very close to this, to the Jaddaf area. So you can see how this entire area is basically going to be the culture and heritage hub. So it's got the proximity to the culture and heritage hub. I know this one in particular, it is falling under the business and the financial hub, the second zone, but they're all sort of interlinked with each other, right? Now the area is very well connected by the Dubai Metro and major road networks. And some locations can offer views of the creek as well. By the way, this area is going to be home to the Urban Tech District, which will create 4,000 jobs by 2030, and it will boost future demand for residential properties over here. The 7.5 square kilometer area currently has 10,854 units. And this is, by the way, as of October 2025. But Jaddaf also has two areas. It's broken down into Sama Jaddaf and Jaddaf Waterfront. And both these have different height restrictions, with waterfront height limited to G+6 floors. And the Sama area is G+15 floors. Obviously, that's because the Sama is behind the waterfront. We want to at least have the visibility as well. In Sama, the average FAR is 5.3, and the average price per square foot is 280 to 400 dirhams per square foot. In Jaddaf Waterfront, we're only talking freehold properties over here, by the way, okay? The average FAR is anywhere between 3 to 5, and the average price per square foot is 320 to 600, depending on the proximity to the water. The fourth area in this zone 2, it's Majan, right about here. It is a growing mixed-use, affordable living community over 1.5 square kilometers, so relatively smaller in size compared to everything else we've seen. It offers a blend of residential and commercial plots. And prices for these plots vary based on size, location, and permitted development type. For instance, you can get a prime residential plot with a GFA of 150,000 square foot for 48 million dirhams, while smaller plots of around 13,500 square foot are available starting from 20 million dirhams at 150 dirhams per square foot. So just for you to get an idea of the average. Now, Majan's strategic location along the E311, this one, the Mohammed bin Zayed Road, it provides great connectivity, and this, along with its pricing, that's what makes it attractive, not only for developers, but for residents as well. The community is designed with sustainability and quality of life in mind, so you can see green spaces, parks, and recreational areas. And you've also got the proximity to attractions like IMG World of Adventure, Global Village. All of this enhances this area's appeals to families and visitors. Now let's look at Zone 3. This part. This is the tourism and entertainment hub, and the way I see it, you can divide this into 2 categories. The first category is waterfront, right about here, which is a premium area. Now these areas are known for their world-class attractions, luxury accommodations, and tourism offerings. Here you can get limited plots in Palm Jebel Ali, which is the world-renowned man-made island by Nakheel. Here, the plots can be used for residential building developments, and the prices for land start at 1,500 dirhams per square foot. If you look at the second category, that's the emerging lifestyle and residential affordable communities category. So these neighborhoods, they are rapidly developing into vibrant communities with a mix of residential, commercial, and recreational spaces. Here, the areas include JVC, which you can see on the map, which, as you may already be aware, it's a very famous community, upcoming community with a lot of construction happening. It's a family-friendly community that offers villas, townhouses, and apartments. You do have parks and retail outlets, and it's a very accessible location. Plot prices here today range from 300 to 500 dirhams per square foot. Let's look at the other area, Al Furjan, as you can see on the map. It's a residential development featuring both villas and townhouses. And again, you've got community centers and parks, and here you can get land slightly cheaper in the range of 250 dirhams per square foot. Now, when I was doing my analysis, I found it interesting. Motor City, Dubai Sports City, Dubai Production City, all of this as well becomes part of this zone. And what do they offer? They offer affordable residential and commercial spaces where land is priced in the range of 250 to 350 dirhams per square foot. If you look at Arjan and the Dubai Science Park, they are both developing areas where Arjan, it's known for its residential projects, and Science Park, it offers both office spaces as well as residential options. Prices here, they're slightly higher. You'll find plots in the price range of 400 dirhams per square foot. All of these areas, they're integral to Dubai's Vision 2040, aiming to create a balanced mix of tourism, entertainment, and residential spaces so that the city's global appeal and livability is enhanced. Let's look at Zone 4. Now, this is going to be the new engine for Dubai's economic growth. That's the area. We all hear about Dubai moving south. The truth is, Dubai is not moving south, Dubai is growing towards the south. Now, I mentioned that this is the new engine for Dubai's economic growth, and this zone includes areas that are strategically positioned to foster industrial, commercial, and residential development, such as Dubai South, a 145 square kilometer master plan city that is centered around the Al Maktoum Airport, and it's part of the wider Jebel Ali Free Zone, which is one of UAE's largest economic zones. The international airport, it's focused on aviation, logistics, commercial, and the residential sectors. The residential district over here, this will offer a mix of villas and townhouses and apartments that will cater to a diverse population. prices of the plots here, the residential plots here, range anywhere between 380 to 850 dirhams per square foot. Broad range, but you will see the different areas and the zoning in this particular zone, and those zoning command the prices. Now, the second, I would say, area within the zone is the Dubai Industrial City. It's an industrial hub that supports manufacturing and logistics and is located right next to the Jebel Ali port. So it facilitates, obviously, the trade and distribution. Now, because of the proximity to the trade and distribution, at the same time, given that it is in, I would call it an industrial zone to a certain extent, the prices of residential plots here are slightly lower. They range anywhere between 200 to 400 dirhams per square foot. So this is the affordable living style. Then you've got Madinat Al Arab. Here, the beauty is its proximity to Palm Jebel Ali. So that's why it makes it a viable option for those looking to secure plots at this stage and phase the construction over a long period of time so that they can tie it in with Palm Jebel Ali, which is slightly longer term project. And the pricing here, it starts from 270 to 500 dirhams per square foot. All of these areas, like I've mentioned, they can be classified as affordable areas. Within this zone, there are also premium areas. Of course, Palm Jebel Ali being one of them. But Nakheel is currently only selling plots for individual villas or mansions as of now. And the price point is anywhere starting from 3,500 dirhams per square foot. But this is only for your villa or your mansion, right? It's only a matter of time that they'll open up the sale of the plots of the entire zone in Palm Jebel Ali to construct residential, hotel and commercial towers here. So stay tuned for that. Another very talked about area in this particular zone is Jebel Ali Hills. It's a premium residential land development project, also by Miras. It offers freehold plots for villas and mixed-use buildings. The plots here range anywhere between 10,000 to 25,000 square foot, and it allows you to build G+1 villas or G+4 for mixed-use buildings. But this area as such, it's more for single-use developments, or if you're looking to construct small, maybe 2 to 10 villas or townhouse cluster developments. Prices here start at 350 dirhams per square foot. Now, Zone 4 strategic developments in Dubai South, Dubai Industrial City, Madinat Al Arab, Palm Jebel Ali and Jebel Ali, it positions it as a cornerstone for Dubai's economic growth, right? That's where the growth is coming from. And you've got diverse opportunities for not only residential, but also commercial investments, as well as villas and townhouses. And it aligns with the city's vision for a sustainable and prosperous future. Let's move on to Zone 5. This zone here. This is the Dubai's hub for knowledge and innovation, and it's going to be the center of it. It's categorized as more of an affordable development. The area includes Dubai's Silicon Oasis and Dubai Academic City. If you look at DSO, Dubai Silicon Oasis, it's a smart, free zone community that combines residential, commercial, and tech-focused business hubs. So here you can find plots that are suitable for this kind of mixed-use developments, office complexes, and residential towers. Smaller plots here are generally at about 350 dirhams per square foot. They can go up to 800 dirhams per square foot as well. You're talking buildings over here. Now the area, it's highly attractive for developers seeking large plots, right, for these mixed-use projects. And the location, it ensures excellent connectivity to major roads like the Mohammed bin Zayed Road, Al Ain Road, and it links the area very well into Zone 2, downtown Dubai, Business Bay, and Dubai International Airport. Let me now summarize it all for you. If you want to develop premium apartments, focus on Zone 1 and Zone 2, particularly your Dubai Islands, Maritime City, and Business Bay. These are established high-demand areas with strong infrastructure, waterfront living, and long-term capital appreciation potential. For emerging and affordable apartment communities, your Zone 2 and Zone 3, they offer the best ground for you. Consider areas such as Jumeirah Garden City, Al Jaddaf, Majan, JVC, Arjan, and Dubai Science Park. These are all central, well-connected, and priced competitively for mid-income buyers and investors. For townhouse and villa developments, Zone 4 is where the momentum lies, especially in Dubai South, Madinat Al Arab, and Jebel Ali Hills. These areas are designed for low-density living, large plots, and strong infrastructure growth around the Al Maktoum International Airport. And for mansion and ultra-luxury estates, look towards Palm Jebel Ali. Look towards the elite island, Island E in Dubai Islands, and luxury plots on Lamer South. They are all positioned as future icons for high net worth buyers that seek privacy, exclusivity, and prime waterfront real estate. Each zone supports a different layer of Dubai's vision, from preserving heritage to driving innovation. But together, they define where the city's next decade of growth will be built. Now, I also wanted to show you, according to Property Monitor, this table. You can see here that 28% of new developments, they're concentrated in 5 key areas: JVC, Dubai Islands, Dubai South, Business Bay, and DLRC. Earlier in the video, we spoke about macro demand. We talked about population, growth, migration, tourism, and corporate relocation, all driving the city's expansion. But the demand doesn't just exist at a city level, it also plays out within individual communities. So now let's shift from this macro picture to the micro demand cycle. How activity moves within areas after handovers, and why what you think looks like an oversupply is actually part of a healthy market rotation. Let's take JVC for example, as you can see on the map. There are approximately 28,000 units that will be handed over in the next few years. But developers are still building there and projects are selling out fast. Why? Because there's a high demand, but this can sound contradictory. Here's why. These areas go through a saturation period, a temporary slowdown after handovers, before prices rise again once your ownership changes hands. Now, to better understand this concept, let me first explain to you the 2 different types of buyers in the market. The first type of buyer, he or she buys an off-plan property for investment or end use and makes the purchase on a payment plan after putting down a minimum down payment of 20%. And they continue to make the balance payments in cash, as you cannot get any financing on off-plan properties. The second type of buyer, he or she is the end user or investor who only purchases ready property to live in or as an investment to generate rental returns. This buyer can go for financing options. So in Dubai, when the first type of buyer initially purchased in these areas, they bought it at a lower price on a payment plan. Now, once the handovers take place, there will be an influx of supply, but that doesn't last long. When the second type of buyer steps in, buys ready units, the prices start climbing. The first investor exits, books the profit, and looks for the next off-plan investment. This exchange of hands, it resets the market, and it's what fuels the next cycle. We're seeing this in the pricing where the same developer was selling a unit for 1,000 dirhams per square foot in JVC, and today 2,000 dirhams per square foot. And it's still selling out fast. The market's liquidity keeps turning, and each cycle, it brings a new wave of capital and development. This exchange of hands, it helps the developer to price at a higher price, and that's the reason why developers, they're still constructing in these areas. The exchange of money between the first and the second type of buyer takes time. And this is what I refer to as the saturation period. After the saturation period, the exchange of money happens, and the investor who has become richer will not be satisfied only to get ROI, because he's seeing the gain, he or she has seen the gains from capital appreciation. So what does this buyer do? This buyer then goes and purchases another off-plan property, and the circle starts all over again. This continuous reinvestment is what keeps Dubai's market dynamic. And we're seeing that play out right now, with new developers entering, buying plots, and reshaping older districts. Over the last 18 months, many new developers have entered Dubai and snapped up waterfront plots near older districts. They haven't delivered yet, but with strong payment plans and smart positioning, they're already competing with established names, and they're earning substantial margins. If you're considering developing in Dubai and want to model your ROI before buying a plot, let's connect. Before wrapping up, let me leave you with some food for thought. Gold has just become the world's first asset to cross a $30 trillion market cap. With that much liquidity in the system, many investors who made money in gold are waiting for stable opportunities, and they may be watchful to invest in stocks and bonds until the investment environment is more conducive. And with Dubai being one of the world's biggest gold trading hubs, it's reasonable to think that some of that capital could flow into stable real estate opportunities in Dubai. I hope this breakdown helped you understand how developers think, where they're building, and why the market keeps expanding. I'm Seema Balwani from Xperience Realty. Thank you for watching.